it is doom and gloom. It is a step in the wrong direction, and it is going to have a negative impact on the market. There is no disguising it. There is no hiding from it, and we are in for a really tough period now, the remainder of 2023. Hey everyone, welcome back to another edition of Super Prime UK with your Super Prime MJ Group Valuers, myself, Rob Cohen.
Myself, James Wild.
Hope you're all well. What a week. The big bombshell of inflation and interest rates have hit us live and fast, and we are here today to give you all of the backlash on the after effects of what has been a shocking week, James. How else can we describe it?
Yeah, I think if we start with inflation, obviously this stayed at 8.7%. The only slight disappointment there is it's the fourth month in a row whereby the anticipated inflation forecasts were exceeded. I think they were forecasting at 8.4 and it's coming at 8.7 this time round. So I think there's maybe been a little bit more optimism from those forecasting analysts than what the data has shown there. Whereas if we flip to the interest rates, which went up 0.5% today, I think it was widely anticipated that the rates were going to go up. A lot of the political figures have been commenting on this, Jeremy Hunt in particular. I think the only slight surprise is that after the last two incremental increases of 0.25%, that it's now gone up 0.5%, and 13th time consecutive increase, Rob. The Monetary Policy Committee have met. 7 out of the 9 members of the committee voted for the 0.5% increase. The remaining 2 actually wanted no uplift at all there. So obviously overwhelming support from Monetary Policy Committee and Andrew Bailey there. So I think with the inflation and also the interest rates, obviously the interest rates is the reaction behind the stubborn inflation, as everyone is alluding to there, and they just have to try and reduce that inflation meaningfully, as the Monetary Policy Committee are saying, to enable these rate increases to stop. I think most of the lenders, Rob, they're forecasting peaks around 6% now. Certainly that's what they're pricing in for. So on a slightly more positive note, I don't think we're expecting sort of huge increases in terms of the lending rates from a lot of the banks. The thing that's going to really hit people is the affordability criteria will change now with some of the rate increases. So that's going to be the real thing that sort of hit people, and the more limiting factor for those that are trying to refinance in the coming months and procure a new mortgage.
As you know, our regulars, we don't hold back on this show. We tell you as it is, and this news cannot be dressed up. It is not good at all. It's not a good week for the economy. It's not a good week for the UK. It's definitely not a good week for UK property lending. It is doom and gloom. It is a step in the wrong direction, and it is going to have a negative impact on the market. There is no disguising it. There is no hiding from it, and we are in for a really tough period now. The remainder of 2023 is going to be tough, and the light at the end of the tunnel has now been kicked down the road, and we are not going to see that light in the months to come, James.
No, I definitely agree with that, Rob. Just in terms of some of the property statistics, obviously we had the big dip in terms of the market. We saw in April. That seems to be a particularly bad month for everything from the mortgage approvals to the transaction volumes. But the latest live data over the last week, if we look at new instructions, 381 for London, sold 137, under offer 213. Very similar to the previous week's data, actually. And it's about 6 weeks of data sets in a row now, whereby that data has actually been reasonably positive for London. I think across the UK nationally, it hasn't quite been as positive in terms of the sales volumes, in terms of stock on the market. Rightmove released some data, Rob, and some commentary in the last couple of days, basically with the headline of the sort of the rate rises taking the bounce out of the spring, with the sort of positive data we've had the last 6 weeks. But I think with the rate rises coupled with inflation, has really taken the wind out of the sails of the property market. I think with that, the summer slowdown is going to come a little bit earlier, Rob. Normally that's sort of well into July when the schools break up, but I think it's going to be brought forward a month, certainly with this news. People aren't going to be acting particularly swiftly here, and any sort of prospective house purchases might be put on hold. Those that don't have to sell might just sort of sit tight for the time being. Further to that, Rob, and in terms of what the Rightmove data was saying, that sellers who price their properties competitively are much more likely to find a buyer quicker, and the property will not linger on the market. And also, if there's a chain, that prospective buyer can then also possibly renegotiate down the chain. So that's been one of the key sort of roadblocks which Rightmove are reporting on. And just secondly, as a sort of analytical point, over the last sort of 6 weeks, where we have had a little bit of positivity in the property market, sellers were starting to accept that it was a buyer's market with that bit more activity in the market. But as sentiment seems to drop off more, we're just going to have to see if the buyer appetite and demand meets those sellers' expectations.
Yeah. All interesting facts and data, James. Some of the headline information that I'd like to share. I suppose a positive slant and something we've been pushing the whole year. I know a lot of you are keen prime, super prime, especially central London listeners and viewers. That data is holding extremely strong. May saw the best performing month of the year in the 2, 3, 5, 10 million super prime plus sectors. All of those saw the best performing months in 2023 across all levels. And as we mentioned on our last show and numerous previous shows, a lot of cash transactions there for obvious reasons. And in this week's data, James, no surprise to everyone listening, but just for that hardcore data and intel, the highest level of price reductions in properties across 2023, and a clear indicator of where this current UK housing market is, James.
Yeah, no, thanks, Rob. In terms of mortgage approvals, obviously very sort of key indicator in terms of where the market is heading, what direction, what appetite is out there. The current data so far for this year bottomed out in April so far. However, with the news of the rate rise, we're going to have to monitor over the next couple of months that data, in particularly for obviously halfway through June now, so Rob. So we're going to have to monitor that July data, which depending how many more rate rises we get this year, on where the bottom of the market falls in terms of those mortgage approvals, which will feed through to the transaction volume data.
Just to put some context on that, James, and for everyone that listens and watches, this is my 30th year in the industry, and let's have a look back at the last 30 years of mortgage approvals to get some kind of context of what we're seeing here. Okay, so the last few months we're hovering between 45, 50,000 mortgage approvals a month. Only 2 other times over the last 30 years have we seen such low mortgage approvals. Those two other moments were Lehman's crash 0809 and the COVID window lockdown of March, April 2020. Two moments in the last 30 years where mortgage approvals have been that low, and they're going to get worse based on what's happened this week and what the indications are moving forward. We are in for a tough ride, and market conditions are challenging. 30-year context there. This is the worst performing mortgage approval market outside of Lehman's and outside of the 2020 March, April lockdown in 30 years, James.
Yeah, and that's definitely going to filter through in terms of those transaction volumes, which we're going to see in the UK. Obviously, if we look month by month, there's going to be some real hollow spots there, Rob, in terms of ill-performing months. But if we look at the annualised data year by year, in those higher performing years, Rob, we've been at about 1 million, 1.2 million transactions in the UK. And on those more ill-performing years, the credit crunch 2008, I think we were down at 800 to 900,000 transactions. So I don't know where you're sort of pitching for this year, Rob. Obviously, we've had a fairly stagnant first half of 2023, and the second half, we're not going to see vast improvements, I don't think. So I don't know if you've got any forecasts or predictions there.
So let's be clear on that. In the last decade, we have not gone sub 1 million residential UK transactions in the UK, and we are strongly on course for having the worst level of residential transactions in the UK. We are on course to go below 1 million this year, and based on what's happened this week, I'll be very surprised if we're not going down to record lows of that 0809 of around the 800, 850, as you mentioned. So that, on reflection of where we were in 2021 and 2022, would reflect a 50% reduction on transactions if we ended up at around 800,000 this year. We will track that, but the way things are looking and based on what's happened this week, I think there's a really strong chance of us ending sub 1 million in transactions and possibly around the 800,000 figure.
Thanks, Rob. Obviously, limited appetite from that buy-to-let market as well, which isn't sort of propping up the transaction volumes at all at the present time.
Thanks for that, James. Big thanks to our partners from Lonres. Great summer party. Great seeing you all there, especially for the ones that came up and said they're avid watchers of Super Prime UK. Very much appreciate it. And disappointing cricket to sum up a bad week, losing the first test to the Aussies. Congratulations to them. Let's hope that the summer improves with the cricket and the summer improves with market conditions. So to close out this week, we are entering the eye of the storm in the UK property and lending market. The fallout is yet to come, but stay with us. We will hold your hand through that journey. We will give you the very latest live intel and data week by week, month by month, and together we will get through this journey and we will come out on the other side. And when we get there, we will rejoice, whatever that looks like. Thanks for everyone. Thanks for sticking with us. And we will see you all again soon on Super Prime UK. Thanks, James.
Thanks, Rob. Thanks very much, everyone.